Hello, I'm Kamal Santamaria. Welcome to our 2014 In Review edition of Counting the Cost. Each year we do this, try to make some sense of what happened in the past 12 months with an international panel of economic experts. And I tell you, it's not easy to cram it all into one show because a lot happens in 12 months. In 2014, we've seen geopolitical tensions, banks behaving badly, currency wars, turf wars over oil and gas, not to mention new leadership and old challenges to economic prosperity. Perhaps the biggest ongoing story has been Russia. We've certainly devoted a lot of airtime to it. President Vladimir Putin annexed Crimea. The West responded by imposing sanctions, which at first appeared to have very little impact, but soon started to bite. Money poured out of the country. The ruble got smashed. You throw in oil's decline and you've got a Russian economy going close to recession. Contrast that with the United States, where the demise of the dollar turned out to be perhaps over-exaggerated. Jobs and the general economy are definitely picking up there, to the point that the US Federal Reserve decided to stop its so-called quantitative easing or stimulus program. But as the Texas oil fields unleashed more black gold, there was a flip side on the global front, as some Middle East nations fought tooth and nail to maintain their grip on the markets. All the while, oil prices continue to sink lower. Hard to believe they were up at around $150 a barrel only a few years ago. And emerging markets, something we focus on a lot on this program, saw changes of their own. Some of the world's most populous nations elected new leaders. Narendra Modi in India, Joko Widodo in Indonesia, as well as a second chance for Brazil's Dilma Rousseff. The people have given them a mandate. Can they deliver economic hope when it's most needed? So we've assembled our expert panel to talk through 2014, and here they are. We'll start over in London with Paul Donovan. He is with the international bank UBS. He is their global economist. Rajiv Biswas is the Asia-Pacific economist with IHS in Singapore. We welcome him. Also, and rounding out the panel in London, Martina Larking. She is the head of the Global Agenda Council at the World Economic Forum. It is a pleasure to have all three of you on the show today. Thank you so much for your time. Paul, I'm going to start with you, and I'm going to start with Russia, because I feel this is the story that has kept going in some way, shape or form all the way through this year. It started with the annexation of Crimea. It moves on to Ukraine. It now is a currency crisis. Is this the result of all that Putin didn't think it could get this bad, that the sanctions wouldn't bite, that oil wouldn't fall, and now we've got this currency crisis in Russia?
Well, I think you've actually got to go back further than this year to see why some of the problems have come about so quickly. Because, of course, Russia had a default in 1998. It had hyperinflation before that. So within a generation, we've had a sovereign default and we've had hyperinflation. And that has affected the psychology of Russian investors. This isn't about international investors. This is about Russian investors. With the decline in the oil price, with some of the domestic inflation that was already being caused by sanctions and by embargoes. And remember, this is both sides. Russia has embargoed commodity imports. And then with the effects of the currency, that has created, if not yet a sense of panic, certainly a very, very deep felt sense of concern. We've seen an increase in foreign currency deposits by ordinary Russians. We've seen corporates moving capital offshore, partly because of sanction consequences, partly because of the general economic concerns. And that has then led to this currency situation.
And it's not just going to bounce back, is it? I mean, this is, so much of it right now is linked to the oil price, the very sudden decline. But even if oil bounces back, it's not just going to fix itself overnight, is it?
Well, I mean, if the oil bounces back, it does, of course, change some of the dynamics for Russia in terms of the trade balance and in terms of the ability of Russians to earn hard currency. Does it mean that the money that is left comes rushing back? That, I think, is relatively unlikely. And again, it's this psychology, the legacy of the hyperinflation, the legacy of the default is a psychology that is inclined to be very nervous. So I think it's unlikely that the money comes back, but you would get a change if oil goes up because, of course, that does change the trade position of Russia very, very significantly. Russia basically has got oil and not that much else in terms of its trade position.
Rajiv, can I bring you in and let's stay on the oil question just for now. Your thoughts on where that's going right now? I mean, there's talk of $40 a barrel, sort of impact that we're talking about that having on Asian nations. Well, just give us your general thoughts then.
I think in terms of the downward trend in oil, the market is very oversupplied right now, particularly out of North America. with a lot of additional U.S. production this year. And we've also had additional Libyan production and some increase in Iranian production as well. So all of that's putting downward pressure on the oil price. So there is scope for overshooting on the downside, but we expect next year the oil price will be around about the 60, 65 mark. And then beyond that, into 2016, we expect a gradual improvement in the oil price as this weakness that we're seeing over a protracted period starts to have an impact on new drilling and new production, particularly in the U.S. So we do expect a gradual uptrend to reemerge after 2016. But the near-term outlook is still for very weak oil prices, so a lot of pressure for oil-producing countries. So of course, we've talked about Russia, that's going to be in basically economic crisis because their budget assumptions are $100 a barrel, and we're almost half that right now. But also Iran, Venezuela will be badly hit because they're so oil dependent. When you look at the consuming countries, they're going to get a big positive. And in Asia, most of the economies in Asia are oil importing countries. So Japan, China, India, and many of the ASEAN countries are also oil importers. So for the Asian consumers, it's a big positive. And so it's relatively good news for Asian economic growth looking out into 2015.
What about the idea that OPEC nations, the Saudis in particular, that they're playing around with this a little bit, and that they say they can live with lower prices, but that it's actually not. Well, I guess that everyone's looking after their own interests in the end.
I think the problem for the OPEC right now is that if they cut their production to try to boost the oil price, it only brings forth more U.S. production. We, prior to the oil price declines, had been expecting about 1 million barrels per day of additional production out of the U.S. next year. So it's not really much of a solution for OPEC to cut production right now. And I think that's why the Gulf states, particularly led by Saudi Arabia, were quite resistant to the idea of reducing production in OPEC, because they see that all it'll do is bring forth more U.S. production over the next 2 years. And that's not really resolving the issue in the oil market. So by having a lower oil price, they're trying to force out some of that production amongst higher cost producers, some of whom are in the U.S., but also in other parts of the world as well. Now, in OPEC, there is division. I mean, not everyone in OPEC was supported that point of view, but in the end, Saudi's obviously the biggest producer, and together with the other Gulf countries had basically won the day with their point of view. Although some of the other producers are really in trouble, like Nigeria, for example, is really going to suffer next year, given the impact on their oil revenues that they're getting, and countries like Iran and Russia we've already talked about. So there's a lot of losers amongst the oil producers in this difficult situation in the oil market.
Martina, waiting patiently over in London, let me bring you into the conversation. Now, you deal with global agendas, and I think what we've actually talked about already feeds into that. The Russia conflict, the West versus Russia, the oil conflict and all of that. It seems, and I mentioned this to Rajiv, that everyone's looking out for themselves right now. There is no sort of leadership and saying this is what will be good for the greater good. It's countries saying we're going to look after ourselves. Is that understandable in this climate, or do we need to be playing a better team game here?
Well, there's 4 really major trends that we've been seeing evolving over the last 12 months or so, and clearly we're seeing a much more strained geopolitical situation with geostrategic competition on the rise, and a move from really this youth disenfranchisement and activism to much more of a really conflict-driven and geopolitical instability around the world. And these are very dangerous risk factors, and obviously lead to also a lack of leadership, but also are fueled by a lack of really global governance structures and legitimacy of global governance institutions. The other thing that we are seeing is clearly concerns around the economy, and maybe a move towards much more of an economic stagnation and concerns about the slowing of economic growth, particularly in some of the countries that have been doing quite well in the past. And also, of course, linked to this, there's the risk of this continued jobless growth, a major concern, not just for youth unemployment, but also globally. And it links into the gap of skills development, labour mobility, the gender gap, many issues that relate to this. And another issue that clearly is on the agenda and plays into it is this major debate around climate and environment and whether we make some progress in the year to come in Paris.
Can I go back to one of the points you made about economies, about growth in economies? I mean, look, the United States, for example, which was stagnating for so long, it is actually growing now. And again, leadership maybe has to come from there whilst they start to pick up and jobs, as you pointed out, actually are coming back there.
Yeah, I mean, the concern, I think, is that there's a slowing of the economic recovery really in many parts in the world, and this is fueled by this jobless growth. And the ILO predicts that this continues for the next 5 years, which will put a huge strain on the economy, which is also underpinned by some of these geopolitical concerns that you've raised earlier, and of course some of the commodities prices that underpin all of this. And clearly, yes, leadership has to be stepping up. It's one of the major crises that we've seen evolving in this year's report that we've launched and the research that we've done. 86% of our experts think there's an absolute crisis on global leadership, but also a trust gap that is being developed between government and society, which needs to be closed if we want to effectively address some of these issues.
Let's go back to Paul Donovan. Thank you, Martina. Go back to Paul Donovan in London. We'll build on this idea of, I guess, cooperation, really. I mentioned the United States, which is growing well. Eurozone's not doing so well. We'll deal with that again later. But the idea that someone can lead us out of all of this.
Well, I mean, in economic terms, the US will lead us out of all of this because that's what the US does. It's the world's largest economy. China is an irrelevance as an economy. It's too small in terms of its global impact. The Eurozone is a potentially significant economy, but it's more inward-looking at the moment. So it's the willingness of the US consumer to visit the shopping mall that generates global growth. And here I would take issue with the idea that there's a jobless recovery. There isn't a jobless recovery. There is labour growth going on in the States. There's labour growth going on, employment growth going on in parts of Europe. What we have, however, is a problem of structural unemployment. That has clearly developed over the course of the last few years, where you've got long-term unemployed who are becoming effectively permanently unemployed, who are being left behind by the recovery. And that, I think, is the challenge, because what that does is actually undermine the ability to generate global leadership. You are getting a class in most economies that have been left behind by the economic recovery that we have had, that have been left behind by the political process, and which are tending to look to scapegoat, to find someone to blame. And of course, the easiest thing to do in any country is to blame the foreigner. And so this is why we're seeing the rise of political parties defined not in terms of their vision and ambition, but defined as being anti certain groups in society, or being anti-foreigner, being nationalistic in their tone. And that, I think, makes it very complicated to get political leadership at a global level.
Right. So Paul Donovan takes issue with the idea of a jobless recovery. Rajiv, I'm going to come to you in a second, but I want to reply from Martina first, because you brought up this idea of the jobless recovery. What do you think about what Paul just said?
Clearly, there is a link to the structural unemployment as well, and this is also a major issue. But there's also the stagnant wages, which contribute to the inequality, which I want to speak about a little bit later, which is one of the major issues for the year to come. And you know, the holding back on consumer spending, which needs to be really increased, as was also mentioned, if we do want to have leadership on the economy and see economic growth really increase in the years to come.
Right, let's start moving on. We've got a lot of topics to cover. Thank you, Martina. I want to deal with some Asia issues, and we'll do that with Rajiv. And again, this kind of feeds into leadership as well. India, for example, Indonesia as well, new leadership there, renewed leadership in Japan with Shinzo Abe, with his still sort of new idea of Abenomics. I mean, is there promise ahead for some of these nations, do you think? They've done well. We know they've done well, but they have this sort of renewal going on as well.
I think it's very encouraging what's happening in India. I think there's really a new sense of enthusiasm and dynamism in the Indian economy since the election of Prime Minister Modi and the BJP party that we really haven't seen for perhaps over 5 years now. I think if you look back to 2013 even, India was in an economic crisis, the rupee was plunging. And really what we've now seen in 2014 is a sense that there are some economic reforms coming through with the new government. And also we should give credit to the Indian Central Bank with Raghuram Rajan as the governor, that they've also done a very good job in stabilizing the situation. So I think 2014 has been a good year for India. We've seen stabilization. We haven't yet seen the growth momentum picking up, but I think there is a new sense of confidence. And that's shown up in the stock market with a lot of portfolio capital inflows into the stock market, even before Prime Minister Modi was elected, on the expectation that the BJP would win. But ever since he's won, it's kept being driven up.
And you know something else, Rajiv,
on
ever
good
since he's
news
won,
and expectations.
just as you mentioned, ever since he's won, he seems to have done a lot of travelling as well. You know, he seems to have spent more time sewing up deals elsewhere than actually in India himself. Is this important for the likes of India, China as well, all these sort of quote-unquote emerging developing countries to get out there and make things happen?
I think particularly in the case of India, if you look at foreign direct investment inflows, they're relatively low compared to countries like China, and even Indonesia was doing better at attracting foreign investment given the size of the economy compared to India. So I think he's right in recognizing the need to really establish the Indian brand, to make India attractive again for the US multinationals, for Japanese multinationals, and working with China as well. So I think he's absolutely right that India does need a lot of investment inflows. He has a big ambition to build a lot of new infrastructure in power, in transport, and also 100 smart cities in India. But in order to reach those ambitions, India will need a lot of foreign investment. So that's why I think he's been quite right in going to the big nations of the both developed and developing countries to try to get new foreign investment inflows. And I think that strategy is working at the moment. I think we are going to see quite a pickup in foreign investment into India. Turning to Indonesia, I think there are also hopes around Jokowi's presidency that he will boost infrastructure spending. But I think the outlook is a bit more difficult for Jokowi because at the moment, Indonesia seems to be somewhat more protectionist within its parliament and also amongst the sentiment in the general population. And we have seen some protectionist legislation under the previous government. But I think those kind of protectionist sentiments are still continuing in the new parliament as well. So I think there is a more cautious outlook for Indonesia right now than compared to India.
Okay, then.
Turning to Japan, I would say,
Actually,
Abenomics
Rajiv, I'm going to leave Japan there because again,
in question.
Japan's something we can actually deal with in our next show. We've got so much to discuss. I want to deal with a few more things here because, believe it or not, we're starting to run down the clock already. Martina in London, let me come to you. One of the things you mentioned before, or among the many things you mentioned before, inequality. This, I think, has been a feature of 2014 and the years before. The haves and the have-nots, the 1%, the 99%, however you want to put it. Big question here, but why? What has it been this year which has stretched that gap for you?
What we have seen is the perception from our experts that just see this as a major concern, particularly on the economic front, but also it concerns more societal and social aspects as well. And I think part of the problem is that they've seen the rich getting richer and the poor not making much more progress. So there's a real concern about how this is going to play out, particularly also with the rise of the middle class and some of the questions. How is the middle class really getting on, particularly in some of the emerging markets like China, and how does that play out in the long run? And so inequality, not only on the wealth aspect, though, also in terms of gender, in terms of aging, in terms of many of the other aspects, is clearly on the rise in terms of our experts and what they see as a problem going forward. And it's not being addressed either. It's been, as you mentioned, on the agenda, but it hasn't been really addressed or tackled efficiently and effectively globally.
Paul, can I get your thoughts on that? You've been nodding there.
Well, I think there's an additional complication, which is not often talked about, but which is a real issue in many economies. And that's we don't just have income inequality, we have inflation inequality as well. And the two combine to make real income inequality actually a lot more profound. Essentially, if you look back over the last 20 years, it has been a lot more expensive to be poor than it has to be rich. If you look at lower income groups, mainly in developed societies, you look at lower income groups, then the things that they're spending money on, food, energy, housing, have tended to rise in price a lot faster than the manufactured product, than the services that higher income groups are skewed towards. And so that is potentially compounding the problem. And with an aging society as well, you get another aspect coming through, that in nearly every society, inflation goes up the older you get. Because things like medical bills go up. In the United States, I mean, this is a horrendous problem. The older part of the population in America face far higher cost of living. So it's not just about the income, it's about the cost of living as well. And that, of course, is what people actually care about. People start giving up on trusting the official statistics, and people feel their standard of living deteriorating because both of these forces are combining. Even if we get lower income growth, if people still believe they're facing higher inflation, that'll potentially be very damaging.
Rajiv, can I get your sort of Asia-Pacific view on that sort of thing? What is... We tend to think of a lot of Asia-Pacific countries as being a bit more low income, but then how does inequality play into that? Because you've also got, as you've described, super cities, booms happening in all places across Asia.
I think you have very different demographics in different parts of Asia. The more developed part of Asia, Northeast Asia, is going through a phase where it's got aging demographics. So I think, and of course their income per capita is also relatively higher than Southeast Asia or South Asia. So I think they're in a different grouping. But when you look particularly at South Asia, India, Pakistan, Bangladesh, where you have very large populations and very low income populations, then I think one of the key problems, of course, is inequality. But also I think when you compare China and India and why have the standards of living not improved, then the key to me is the growth rate, because India's been growing on average maybe 5 to 6% over the last 30 years, whereas China's been growing at about 10%. And I think that differential has very, very significant implications in terms of the living standards. Right now, China's per capita GDP is 3 times that of India. So they've come a long way compared to India. And it's a lot of that's about achieving high growth rates. So you can't afford to have long periods of softer growth. Like India's just had, 3 years when growth rates dipped to about 5%. India can't afford to have that. It needs 8% per year or more for a reasonable long period of time to get into the middle income levels. And of course, in the case of Pakistan, you have additional complexities because of political instability. And in the case of Bangladesh, although they've done a great deal at the moment, they've been growing relatively well. Again, there's a lot of political issues as well, political disruptions that have impeded the progress of the country. So it's a complex mix. And
just pause for a second, Rajiv. I just want to get a final thought from Martina before we have to wind this show up. As Rajiv said, there's all this growth and yet all this inequality, which you and Paul have pointed out as well. Sure, I mean, again, another one of these big sorts of questions, but how has that happened and what do we do about it?
Well, I think the important point is really to look towards solutions and to really galvanize the private sector and public sector and society to really address this issue going forward. One of the main issues, of course, to address is the tax policies across countries. Also the social and welfare policies, but clearly it links back to our discussion about jobs, creating the jobs, not only the quantity of jobs, but also the quality of jobs that are needed to really bridge that gap. And in some countries also, you really want to bridge the gap, as we've discussed, on gender, and potentially also looking at how to bring some of this aging population, make them still be part of the workforce or, effectively contributing to the economy going forward.
All right, we're going to leave it there, I think. So much more to discuss, but we're out of time, I'm afraid. But thank you so much to our guests this week, Paul, Rajiv and Martina, joining us from London and Singapore. And if you want that discussion to make even more sense, then join us next week when the same panel assembles for us to take a look ahead to 2015. That's it though for this edition of Counting the Cost. I'm Kamal Santamaria from the whole team. Thanks for joining us. The news on Al Jazeera is next.